We're as optimistic about Bitcoin as we ever have been, but there are a few regulatory and tax uncertainties, and we had been waiting for the discount between GBTC and NAV to narrow. It was as high as 50% at one point last year when there was great uncertainty around all of the turmoil in crypto generally, and now it's single digit. And there are now other products out there that we can use to gain exposure to Bitcoin in this moment. And it's just a moment of uncertainty between now, we think, and January 8th to 10th, somewhere in that range, perhaps. But we, out of an abundance of caution, didn't want to take any risk.
Over the last week of 2023, Cathie Wood and ARK Invest did something shocking. They sold off their entire Bitcoin position, which they were holding in the Grayscale Bitcoin Trust. This was well over $100 million worth of exposure to Bitcoin. For ARK Invest and Cathie Wood, this seems insane, as they have been Bitcoin's biggest advocate with price targets in 2030 of $1.4 million. So why would they sell? And it all comes down to the coming Bitcoin ETFs. Bloomberg analyst Eric Balkenhaus believes Cathie Wood sold off their Bitcoin in preparation for the approval of a spot Bitcoin ETF. ARK Invest have a pending application, so it's believed they are going to use the money they had in the Grayscale Trust to seed their first investment in their own Bitcoin ETF. By doing this, they will hopefully attract more investors into their specific ETF. In Cathie Wood's latest interview, she breaks down why she ended up selling and also gives her outlook for Bitcoin in 2024. Make sure to stick around to the end of the video where she explains why ARK Invest is expecting to see deflation over the course of 2024, which will be extremely bullish for innovation and crypto in general. Also guys, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join over 40,000 others in becoming a better crypto investor right now. Now here's Cathie Wood on why she sold.
As I mentioned before, there are some tax and regulatory uncertainties still as part of this process. We don't know exactly who's going to be approved and whether they've met all the criteria that the SEC has put before us. We know we have, but we don't know if others, including GBTC, have. We just don't know. So again, out of an abundance of caution. And GBT's discount, again, it was as much as 50% relative to NAV. So not only have we enjoyed this year the run in Bitcoin itself, but we've had the nice closing of that discount. So it's been, double good news for us. Well, we think the probabilities have gone up because the SEC has been highly engaged compared to what was happening before. Before, it was just denying approval. And we just kept putting our filing in again, try,
Yeah.
dogged and determined. And so here we are. We think we're first in line, and that's why there is this January 10th deadline. But we like the idea that the SEC has been so engaged, and it's not just with us, it's others as well. We think a number of funds could be approved at the same time. And they've been asking not only one set of questions, but follow-up questions. And again, that's a very good sign. The last few questions have been very technical and so more de rigueur, and you'd expect them to be asking these questions as we head toward an approval. Now, it's not 100% certain, and so we want to make that clear as well. This is the SEC, and we never know, what might happen along the way. We are very happy that a couple of things have happened. That this idea that interest rates were going to continue moving higher has been proven incorrect. And I think even the Fed, while there is that small possibility, even the Fed is now starting to talk about the other side of the interest rate move. And so I do believe all we've seen so far is a reaction to that macro phenomenon or judgment call. We went through our flagship strategy and all of our strategies went through a very difficult time from February 21 through December of 22, as interest rates, first of all, were presumed to move up or forecasted to move up. And then when they did move up, so it was almost like a double discounting. And so we've seen the first installment of the correction there to the upside for our funds with this notion, and it's again the forecast that interest rates will come down. And we would presume that if they do come down, for the reasons we think they're going to come down, the most important one being deflation, then our funds will be in good shape, because we are our companies thrive on deflation. Technologically enabled innovation is deflationary. Well, we put up a chart in one of our In the Nose, which is a YouTube video that I do every month, Employment Friday. And in that chart, you will find a ratio. It's the metals to gold ratio. So metals price to gold price. And there has been an extremely tight correlation between that ratio and long-term interest rates. In October, we published it, or early November. And what you will see is that there was a very wide gap that had developed. The metals to gold ratio was near its low for the past 12, 15 years. And interest rates were at their highs, 5%. The correlation, if you just eyeballed that chart, the correlation suggested that rates should go to 2%. Now, maybe they won't go all the way to 2%, but we think that long-term interest rates are way above where they're going to end up because of deflation. Now that we've had this very nice run this year, we think the answer to that question is in the private markets. They're close. What's fascinating to us is that the public markets have been leading the private markets for the past 3 years. As our funds were falling in 21, private valuations were going to all-time highs, along with the NASDAQ. They were taking their cues, I suppose, from the NASDAQ. But real innovation, if you looked at our portfolios, was starting to revalue to the downside, and even more so in 2022. We are still seeing major down rounds taking place in the private markets. And I'm always surprised at this sort of thing, because you would think that the private markets lead the public markets. That has not been the case in the last few years.
So there's Cathie Wood, and it's clear that their strategic move to sell off their entire Bitcoin position, valued at over $100 million, marks a significant pivot in their investment strategy. The bold decision, particularly surprising given ARK Invest's historical advocacy for Bitcoin with price targets of 1.4 million by 2030, raised many questions. But Cathie's explanation, tied to the anticipation of Bitcoin ETFs, particularly a spot Bitcoin ETF, sheds light on this strategic shift. With them selling out and preparing for an ETF launch, they must have near 100% confidence in an approval. Her insights into the expected deflation over the course of 2024 and its bullish implications for innovation and the crypto market are particularly noteworthy. Before we go, a quick reminder for those who are keen on staying updated in the fast-paced world of crypto and Bitcoin. Consider subscribing to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 40,000 subscribers for insightful crypto investment information. Click the first link in the description to join our community and elevate your crypto investment knowledge today. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.